Hello, good day, and welcome to today's daily educational video here at Forex.Academy. I'm your host, Robert Blackwell, and have the pleasure to walk you through today's education. Now, before we do so, please consult the following disclaimer. There is, of course, risk involved trading in financial markets. And the content of today's particular educational video, we will be discussing long-term support levels.
So this is daily price action. What do we define this as? Well, it's a battle for price. So when we looked at this market in question, we could see that it was looking to reverse off such lows here, okay? Now, what we could do is just look at this, okay? In broader context here, we'll zoom out. Do you see where we're at in terms of this level? Now, what do we call this in terms of technical analysis? Again, we'll discuss this in a little detail. Effectively, right at these levels is a support and resistance. That's what we call this. We call this a support and resistance level because we can see, guys, well, way back when in November 2017, this was the low of this market before it traded up quite strongly. We've now reversed to this level. Now, this is historically very important for us as a technical trader. Okay, this is November 2017. So let's zoom in on the price section. It doesn't mean that we have to have an overall goal that this market needs to trade up, or our objective is to this level or this level. Okay, although that could be the case. It depends on the time horizon of your trade. It could just be a trade over the next 20 minutes like we were suggesting. So how does that stack up for us? Well, we're trading the overall structure level. We're simply looking for a bounce from this level. Okay, and we're on 30-cent profit on the trade. Again, we're only taking a 0.01 lot, so it's a very, very small risk on the trade. And we can zoom in, always zoom out, and zoom in on the price section to give you your overall objective stance. So let's just say we want to add some capital to this trade. What we'll do is go to new order. We'll look to buy this market again. We believe this is a really good trade, and we'll look to just see this market retrace. Okay, now we need to place a stop loss for these trades as well. And what we'll do then is choose to place a stop loss just the last corrective low for both of these markets. Okay, so we'll just choose this one a little lower, and effectively we have gained some exposure to this market. So what we've done is place your stop loss there at $1.44 and $1.17, but we're looking for a much bigger winner. Okay, this is the 1 hour price section. Again, we can always zoom out by moving this, and again you can see something is stacking up here. Now, what do we observe with this price action, guys? And again, you can type in some answers to the question and answer section there if you have some questions. Well, we see a bit of a sell-off here, but we are at a long-term resistance level. We can look even for profit potential around nominal levels here. So this is perhaps a short-term trade for profit around these levels. We've gained some exposure because we were correct the first time. The market traded up, and as it reverses, we're just trying to gain some exposure at these levels again by monetizing risk, and it looks to reverse. The candlestick itself is just trading up. So we'll see how this trades in the next 20 minutes of the lesson. But if our profit potential is here, guys, we're simply adding exposure to this trade. And you can see simply you can go to symbols actually. What I'll give you some advice here is go to your symbols here, symbol section, and just click that so that you can see, guys, when I remove this analysis, these are the two trades in the same instrument here. One is simply onside 25 cent, and one is 30 cent offset. And as the market trades, just in that short-term volatility, we'll see the overall position change. Okay, so that's just one way to assess markets. So again, we have identified candlesticks in their effect. I mean, what do we see on screen here? Well, here is our engulfing bearish candlestick. Here is our rejection candlestick here, okay, but again still weak. Here is our overall rejection to the downside candlestick here, almost engulfing, and that is the reason why we took the trade, albeit the market is trading with some volatility just to the downside level.
So that brings us to the end of today's educational video here at Forex.Academy. Thank you very much for joining us, and we'll see you next time. Bye for now.